Cody Davis, thanks for coming on the podcast, man. I've been watching your stuff now for a few years. I think the first time I saw you, probably for a lot of people, was on Bigger Pockets. And I think your story is especially resonating because it kind of cuts out all the excuses for people of, oh, I don't have enough experience, or, oh, I don't come from a lot of money. It's like you started out when you were you might have been like 20 years old, I think, or something, when I saw that video, and you were able to grow this huge portfolio and have a lot of success. And you basically did it from nothing, just from building relationships and stuff. So I think that's an inspiring story, and I'm excited to get into the details, but thanks for coming on the show.
Absolutely. It's a pleasure to connect. And like you mentioned, Bigger Pockets is how I got out to most of the people I know today, because I don't come from a real estate background. So spent a couple years figuring things out. I think I was about 3 years into my journey. Started when I was 19. Bigger Pockets released right as I had turned 21. So it was a couple years, but yeah, exciting. And
That's crazy. So can you give me like a 30,000 foot view of how you got started? Just the cliff notes of like how you got into real estate and what you've gotten to now.
Yeah, I started as a broker. So I was a real estate agent. Broker and agent are synonymous here in Washington State. I wasn't a good one. Wasn't selling a whole lot. My first year, it took about 6 months to sell my first property, just over. I sold a little duplex to a gymnastics buddy. I've been coaching parkour and gymnastics for about a decade now, and back then, I was a couple years into it. Someone that I had met called me up, asked if I had any ideas for buying a house. I mentioned buying a duplex, so I sold him a duplex in a place called Bremerton. My first payday was a few $1,000s because the duplex was like $300,000, a little less. And then sold a mobile home, sold a house. And after that, there was a seller financed, it was listed on the MLS, 12plex. And there was some stuff in between it. There were brokers in the office selling seller finance properties, and I started learning about how to do that, the resources they had given out. And so I ended up buying this 12plex without any money out of pocket. I had about $3,000 in my name at the time, and I bought it with 100% debt, the Robert Kiyosaki model, and it cash flowed. It was about $800 a month. So I bought that. Fast forward a few years, I bought a few more deals by myself. I ended up buying a bunch of apartments with partners after that, after I got a little bit more established. Got to just shy of about 250 rentals. I was in the 250s, somewhere in there. Sold half of them, bought out partners on almost all the rest. And that's where I am today.
That's such a exponential growth curve right there. Let's start from the beginning, kind of the first deal. I've been talking to a lot of real estate people on here. I interview kind of just in general entrepreneurs and finance people, how to make money and grow wealth. A lot of it tends to be real estate. But one of the common themes I see with the real estate is similar to your story. People start out and then the advice they give back is different than what they did. For example, like a lot of them say, when they got into the game, they were just like, a few $1,000s in their name. They went and bought a rental property and kind of just figured it out as they went. And then where they're at now, it's more like, okay, maybe make sure you're a little bit more stabilized, have some reserves saved up, maybe do a little bit more research. What would you do going differently with that first deal, knowing what you know now?
Well, I would have done it the same way.
Okay.
You have to get in where you fit in. You have to do what you can with the pieces that you have. And you got $3,000 and 19 years old. If you're able to buy a property in that situation that cash flows, absolutely. Like, that's something that I would be inclined to do.
Okay. Now, what about like, say something breaks? Would you just like raise money to go fix the roof or whatever, like, water heater?
No,
you know what I mean?
you figure it out. Stuff did break. I was cash flowing only about $800 a month. And when I say only, I'm not saying that's insignificant. I'm just saying like that was my extra savings money every month after budgeting for other stuff to solve those problems.
Okay.
Which, stuff breaks. Stuff did break. I had to go figure it out. I had to learn how to swap a toilet a couple times. I had to figure out plumbing. How do you swap out electrical outlets? Because back then the property had Cisco panels, and what ended up happening is these old outlets would explode. Like, not like a huge cinematic explosion, but they would basically fizzle out. It'd kill the connection. They'd turn black, and it was a hazard. So I'd had to learn how to swap those out, and eventually the property made enough money to where I could borrow against it in second position, 12% interest. It's not like I ever got any cheap money. I've never had a bank loan under 6%. So I borrowed it hard money rates basically as I got the cash flow up and replaced the Zinsco panels and replaced the heating element, like the heaters and the water heaters, but that took time. But in the beginning, I didn't raise extra money. I just drove over. It was 3.5 hour drive and I fixed it. And then I drove home.
Right. So how did you end up finding that deal, the 12plex, right?
It was on the MLS.
Oh, it's in the MLS. Okay. And
Yeah,
you were an agent, so you just started the conversation and went from there?
I called up the broker. I let him know I was working on a deal in a place called Moses Lake, which was about 40-minute drive from where this property was at in Quincy. And that other deal had fallen apart. It was an off-market opportunity, 22 units. It was a quad, a 6, and a 12. Another broker was working on it. That was part of the story I was sharing earlier, how there were other brokers working seller finance deals. That was going to be for one of their clients. Their clients couldn't put it together. The owner of the brokers was like, why don't you do this? And we could figure out how you could raise down payment as debt so you can own it by yourself. Well, that thing fizzled out. So when I called this other broker in Quincy, I was like, I was working on another deal in Moses and it fell apart. I saw this is on the MLS. Is it still available? And we worked out terms through the broker to the owner, and it was a long back and forth, but I got it under contract shortly after that outreach and closed it a couple months later with 100% debt. It was 90% seller financed and the equivalent of a hard money second. It was a client of one of the other brokers in that office, and I pitched a lot of people there and botched most of them. It was a fun learning experience.
Yeah. What's that like going into a 12plex, having not a whole lot of experience? Did you have a little bit of imposter syndrome, or like, was it difficult to, sound like you were somebody that could buy a 12plex at the time? Or did you just basically do enough studying and learning where you just, owned it and they could tell that in your expertise just from your conversation?
I feel like everybody getting started has imposter syndrome, regardless whether they're trying to sell real estate or buy real estate.
Yeah.
The thing that I butted up against that was difficult is my first few pitches, I was so nervous that I forgot things like the purchase price, the down payment amount, the cash flow, the debt terms, the things that are pretty important when trying to borrow money. And so, I'd botch pitch after pitch after pitch and eventually land one. And it was, so the owner of the brokerage, he had cold DM me on Facebook because I made a post about wanting to get into real estate someday. I shared some of that on the Bigger Pockets podcast, how that all came to be. But he was one of the guys who reached out. And so I had just met him, and 9 months after meeting him, he's like, I have one client who will probably do it. And he walked me through how to pitch it. And so he's like, you should write it on the whiteboard so that you don't forget. But that's smart. And so I just went line by line, and the pitch was, if I mess this up, I'll sign over my ownership in the LLC to you. You don't even have to foreclose on me. I appreciate the opportunity, and I'll make the 1% a month interest payment to you on this down payment money. And if I truly screw it up, you'll own a 12plex that has great cash flow.
That sounds like an easy sell when you put it that way.
Yeah, but I didn't put it exactly that way because back then you got to imagine 19-year-old being super nervous to ask for any amount of money. Exactly. It wasn't as smooth.
So how has your strategy evolved to what it is today? Because you're buying bigger than 12plexes, and I'm assuming you're going off market a little bit, or kind of how have you snowballed this into what it's become?
The last 2 purchases I made were still on the MLS.
Okay.
Over half my portfolio I've purchased. That includes the hotels. We're on the MLS. And, I've done a bunch of off-market stuff. I bought a 15-unit off-market last year. I bought some other stuff here and there off-market that ranged in sizes. But the strategy remains the same. I try and solve for, is this something I'd like to hold long-term, or could I hold it long-term? Because if you can't hold it forever, if you have to flip it, then, you're going to get a short payday potentially, but you have to keep doing that. It becomes a job. So I look at stuff as, can I afford to hold this for the long term, get paid to wait, and do I have the resources to put it together? So it's the idea of, how do I buy it, and is there a way that I can hold this for an extended period of time, 10 plus years? But I have been upgrading into newer properties. That's the only thing that's changed. Back then I didn't have a path that I knew of to get into new stuff. Now I'm working on getting into new stuff.
Okay, because they're just easier to maintain and less repair costs, that sort of thing?
Yeah, and from like insurance risk, and lenders look at me, and even if I have the equity and the cash flow, lenders also want to know that I'm not a ticking time bomb on CapEx. It's more stable if I have newer schedule of assets. So that's what I'm working on.
Yeah, that seems like a good strategy. So, what are some of the biggest levers that you can pull when negotiating? And also, coming back on another point, kind of in the same question, a lot of people in the commercial real estate world are thinking in like 5 to 10 years and value add and sell and get these paydays like you're talking about. Where did that wisdom come from to think long term in multifamily? Because it just seems like it's a little bit more uncommon in that world, or maybe correct me if I'm wrong, but that's kind of where what I can tell.
I don't look at IRR,
Okay.
and I think that's the biggest differentiator. People look at IRR and the velocity of capital, and they're like, well, if I hold this for this amount of time, my IRR goes down, rather than if I do the value add, maybe pull some money out, and then a couple years later I sell it and go do another deal. Like, okay, but it's kind of like the idea of Airbnb versus long-term rental. One's going to be more work and one's going to pay higher
Yeah.
in theory. I learned this from owners in the market that I live in now. I was reaching out to owners in the beginning rather than asking for a sale, because I didn't ask for sales in the beginning. I was asking to learn how they got to where they're at. I really valued, and I still do value, the learning experiences that they've accumulated over decades. They started way before I was even born. So getting those takeaways early gave me a game plan. And since I figured out what is it that I want to do, because most people don't know what they want to do, I can tailor fit a game plan based on their experiences and mine to get to where I want to go more efficiently. So my conclusion from everything was I could do a little bit more work, do the buy, the sell, the buy, the sell, and get a little higher return. Or I can do what these really wealthy folks do, and I can buy it, I can rent it, I can hold it. If I need money, I can refinance it. And if I truly don't want to hold this type of asset anymore, I want to upgrade to new, I can sell it and then I can upgrade. But I'm not doing it from a velocity of capital perspective. I'm doing it from a preservation of capital perspective. So as long as I don't lose money and it grows slowly over time and I don't have to work for that, by the time I'm a little bit older, give it another decade, I'll be 36. Everything should be producing more than my buddies who are doing all the quick money stuff.
They just sort of have to be flipping and on the hamster wheel. Meanwhile, the stuff you bought 10 years before has been paid down and the cash flow is higher and you got equity. And I can see how that is a good play long term.
And there's value in knowing your assets. If you keep flipping, you're going to learn, you will learn more because you're going to come into more problems. However, if you just hold these producing assets for a long period of time, you're going to know your assets very well. There's not a lot of ambiguity. There's not a lot of pitfalls that you're not going to expect, because you're going to be dealing with similar problems every year until you fix them, and then maybe you have a different problem, but you address all the problems eventually and they go away. So you're not having to overcome new challenges with your portfolio. You just get to start stacking cash flow rather than reinvesting all the cash flow forever into your new problems that you didn't expect.
Mm-hmm. That's interesting. What are some of the levers that you can pull when negotiating to get the terms that you want and still have them be happy with the outcome? For example, like the long term, the cash flow versus them meeting a price or a timeline, that sort of thing.
Yeah, so one of them is the amortization piece. Some people really want an interest rate, and so as an example, 6% interest on a 30-year AM is the same cost to capital as a 7.19% interest-only loan. Payments are the same. On a 25-year AM, it would be the same as a 7.68% interest-only loan. So if someone is really attracted to an interest rate, number one, you could look at stair-stepping it up. So there was a deal where someone's like, I need 6. I have to get to 6. I'm like, I can get you to 6. Let's start at 4. In a couple of years, we'll go to 5. Then we'll go to 6. I'm going to get you to your 6. And so you could stair-step things up. If someone's attached to a certain payment, then you could do a low interest rate with a short amortization. Like that example I just gave you, you could have a higher interest rate interest only or a lower interest rate on a shorter amortization. Those are some of the levers you can pull to get them to a certain payment. One of my very first partnership deals, it was 38 unit apartment building, and I own that by myself today. Bought out the partners. They were like, I need $10,000 a month, and I don't care how you get there. So I proposed 4% interest, and it was a $10,000 payment, but the interest was only like $5,600 or so. It was something like that. And so the pay down every month was almost the same amount as the interest. It was just shy of being 50% day one towards the principal. So I paid it down very quickly.
That's incredible. And I guess what are the biggest objections you get when talking to people? Are they stuck in this idea that they need a lot of money now, or are they seasoned enough in real estate where they're just completely open to whatever works? Or do you have to kind of sell your point to them to find those more creative terms?
You have to know what you want, and you
Mhm.
have to provide a clear path to get there that's easy to understand. It's the reason that if you and I were to pitch the same person the same thing, one of us might get a different outcome. Whoever's crystal clear on what they want and has identified a path to get there, like that example, if I own a property and you want to put 10% down, and I want you to put 30% down, right? We're talking a couple $100,000 difference. If I don't truly need the money, the typical reason that someone would say, oh, they want more is they want you to have more skin in the game so that you are invested in making it work. So, I know what I want. I want to do 10% down. So something I've offered in the past to get over that is rather than having the seller finance note be non-recourse, I make it a recourse loan. You give them the same, put myself in the same position as if I was signing with a bank. If I mess it up, they don't just take the property back. If there's a deficient amount, then they can sue me for the delta. Trying to give them some more confidence. When I'm trying to negotiate a deal right now, I can show them my balance sheet and they're like, okay, I feel comfortable allowing you to do this. And if you don't have the balance sheet, then you just have to be crystal clear on what you're going to do with the property. Another way I got a deal done when they wanted a couple $100,000 down, and I got it done with $75,000 down at closing on $1.3 million purchase, is I said, look, I can give you all of this money as a down payment, or I can take the same amount of money that I would have given you, and I can throw it into the property. We both know it needs it, and what this is going to do is it's going to take the value from 1.3 to 1.6, and so rather than de-risking your situation by giving you a little bit of cash and having a rundown building, I'm going to boost the collateral so that your position's even stronger because you're going to be holding this contract against a really nice building rather than a really crappy building.
Yeah, I could totally see how that it kind of is a perspective shift, and the people can get closed-minded in a little bit of a sense where they don't want to go outside of the box. But then if you kind of break it down in a way that makes sense and actually is advantageous to them, that's kind of how you unlock those deals. It seems like on the Bigger Pockets episode, I remember you were saying every deal you wanted it to be able to retire your mom. Is that still a primary factor when you're buying a deal?
Well, the amount of money, so yeah, but it's also now like I'm married, we're gonna have kids, so like
Yeah.
there's also different pieces in play now, like things I have to think about. But the idea remains the same. If I can't buy a property where the NOI is over 100 grand, I'm doing a whole lot of work for a relatively small payout.
Hmm.
Because your net operating income, it's your cash flow if you paid cash or you have no debt. So if I buy a property where the NOI is like $20,000 in the Midwest or wherever it may be, I do all this work to buy it, to renovate it, to manage it, to pay it off. And by the time it's paid off, I get 20 grand a year. It's a lot of money, but it's a lot of work for, in real estate, relatively low payout. So yeah, I still want to buy properties that could retire a family member. And I put that at like 100 grand. So I want to buy properties where the NOI is 100 grand or more. And really what I'm pushing to today is this is just from more owner meetings that I've had since Bigger Pockets, but I'm trying to build to legacy property. And a legacy property based on my metrics is $500,000 a year of NOI. And the idea is if I have $500,000 of NOI, which you can backtrack the math, but it probably means the property's generating 900 grand a year of rents, 75 grand a month. So about 400 grand of vacancy and expenses. On $500,000, if I pass away, half of that could go to debt and half of it could be more than enough for my family to live on. So, that's the legacy property piece. You leave a legacy for whoever's to follow. And to get there, I believe the number's $500,000 a year. So the property value is sitting between $8 to $10 million likely for something like that.
The property value is okay. How much of the cash flow right now are you using for like day-to-day life expenses, or does it all go back into the property, or kind of how are you directing that income at this stage?
We don't have kids yet, so we live on $4,000 a month, and 2 of that comes from the portfolio, and 2 of that comes from my wife. And she has her own passive income, and she's had passive income since before we were together. So she's built her portfolio, and I built mine. Now it's ours, and between everything, she pulls in 2, I pull in 2. We put that into one of our joint bank accounts, and that's our spending money. That pays our rent because we rent where we live and we rent out what we own, and we don't have consumer debt. So that keeps our costs really low.
Yeah.
So we just live on 4, and everything else goes towards debt payoff and reinvestment.
And how long? I mean, that seems like a pretty restricted budget in a sense, especially, don't you live in like Moses Lake, you said? That's kind of a higher cost living area, right?
No, well, no, not Moses Lake. So we rent a brand new townhome with garage in a good area for $1,800.
I guess the point I was getting to, like eventually later on, once you've reached that legacy wealth and you have, a lot of extra spending income. I mean, sure you do now, but just like once you've reached the point where you think, okay, like I can just basically stop and it's going to keep growing. Are you going to continue to live this much? Well, either way, be below your means, but are you ever going to like increase your lifestyle, I guess is the.
Yeah, we absolutely will. By the time we move back where we want to move and we have kids, our cost of living will probably be $10,000 a month. And based on our investment plans right now, we can't afford to do that. Like we stay cash strapped. People think we have a bunch of money. We don't have any money. Like all of the money that we bring in either goes to debt payoff or it goes to improving these assets. Because every dollar I invest today is going to be hundreds of dollars down the road. And so I'd rather than buying a nice car, I'd rather reinvest it. And I have some friends who are of the mindset, well, you're only young once, you should enjoy it. Like you're only young once, you should earn your freedom so you don't have to work later. That's the mindset that my wife and I subscribe to. So that's what we're doing. But it shouldn't be too much longer. I mean, maybe 2-3 years, and then we can really start to enjoy what we've built. Because I'm going on year 7 right now of the investment journey. And so it takes a decade is what I've found. And anybody that says you can do it a lot faster, there's not really a good way unless you just hit the perfect opportunity and the right timing. Like it takes a decade. So I feel like we have a couple more years left until we really start to ramp up our enjoyment factor.
Yeah. Well, I mean, you say a decade like it's a long amount of time, but compared to what most people do when they start a job when they're 20 years old and they work 9 to 5 for 40 years to be able to live the last 10 years of their life doing what you want. 10 years in the beginning when you have the least amount of responsibilities is almost like a blip on the screen compared to, what most people, they might think that's long, but then they like go to proceed to just be in credit card debt their whole life and wait 40 years to be able to stop working.
Yeah, and it's going to happen either way. Like you're either going to be alive in 10 years or you're going to be dead. Those are the options. And so you might as well get your act together because it's going to pass or it won't. Like those are one option is ideal and one is not. So you might as well make it super ideal rather than just okay.
When you're partnering with people, are you, I guess, how are you structuring partnerships when buying these properties? Because you mentioned that like half of them you had partnerships with. Was that to fund a down payment? Are these like equity partners? Are you doing like some sort of syndication? How are you working with other people to buy property?
I've never done a syndication. Some of my buddies love it. I haven't found the right opportunity for that, and I haven't found the need to do it yet. As far as the partnerships go, if I'm actually partnering, then yeah, it's an equity partner, and typically it comes with a buyout agreement. So if we go buy a property for $2 million and it's 15% down seller financed and I need $300,000 plus some renovation money and closing costs, maybe I need $400,000. My objective in a deal like that is going to be, let's say you have the $400,000 and I've known you for a while. We go in, you write the check. I'm doing it with one person, maybe 2 max. And we go in and joint venture. My goal is to, if you put in $400,000, I'd have a buyout agreement for $800,000, which means that if we buy it for $2 million, $300,000 down, debt of 1.7. If my buyout option is $800,000, now my cost basis is 2.5. So it's like, what would I need to get the value to get a loan for 2.5 plus the closing costs? And it's probably going to be in the mid 3s, maybe $3.5 million. So what would I have to do to this $2 million purchase to push the value up to 3.5? And then I can get a loan for 2.5. And I've done that. I bought a building for $2 million 300 grand down plus some closing costs. I got a loan on it today. I've since paid it down a little bit because of amortization and time, but it's just shy of 2 and I pushed the value into the high threes. So, there are deals out there like that. That was on the MLS for a long time. Most of my best deals have been. But I have to work it backwards from once I figure out the money piece. Is like, okay, how do I get that return? What's the timeline? And since I would have a buyout agreement, I can own it by myself. And that's how I got that 38 unit by myself, is it was just a matter of operating the deal better than the last person, bringing a partner with a buyout agreement on the front end, and then getting the value up and buying them out.
And when you say buy them out, you go get a bank loan?
Yeah.
And then,
yeah, okay. You could do that. I've done some buyouts where the partner doesn't want all the cash, so they take some cash and then they seller finance their equity out. So they accept payments, and then I use the cash flow from the property as long as it has it. It should have it, on most deals to make the payment. But it helps simplify your universe when you don't have the money. You just sign a promissory note, your partner seller finance it out.
Yeah. Okay. And what are the biggest value adds you've found? Is it, I know increasing the rent's going to add value. You're also renovating the property. Are you creating other incomes, creating storage, or like what are ways you've found to add value?
Optimizing layouts is really important.
Okay.
So I've turned studios into one beds. I've turned 1-bedroom units into 2 studios. I've turned 1 beds into 2 beds. I've turned 4 beds into 2 different units. That turn storage into units, turn storage into bedrooms. Taking wasted space and adding it into the rental pool is usually a good use of time and money. And like as an example, I turned a 1-bedroom into a 2-bedroom by chopping off part of a storage unit.
Okay.
And I was able to offer that 2-bedroom as the cheapest 2-bedroom for rent in Grant County. That is not subsidized. So rather than being a top of market 1-bedroom, now I'm the cheapest 2-bedroom. But I still get a premium on the rent. It's a couple $1,000 a year more. It's a couple $100 a month more cash flow. And it only cost a few $1,000s to do it. So after the first year, there's no money in it. It's paid for itself. It's great. But optimizing space is the biggest value add, and a lot of people neglect that stuff.
Yeah, for sure. And are you, I guess, like how are you analyzing a property to see that it is a potential candidate for it? Or like if you have a 1-bedroom, are you just seeing like a certain layout that you're looking for that, okay, yeah, this space could be used as an extra bedroom instead of, a spare room or something like that? Or
yeah, it just comes down to walking the real estate, and you got to put your eyes on it. And you can't do that sometimes till you're under contract if you can't see the photos and you can't really get a good idea of the layout. There was a building I bought where the apartment itself was like 150 feet long, and it had 3 kitchens and multiple bathrooms and multiple exterior doors.
Yeah.
And it was just the ugliest building ever. The layout was stupid. It was long and skinny. The way it's laid out should have been 3 units, and so that's what I turned it into. Because that's what it used to be. The owner basically just chopped the door in these units so he could live in a massive space, and then moved out and rented it out later. But I would have had to walk it to see that, because it was on the market forever, hundreds of days, and no one saw that opportunity.
Dang, that's so crazy. Okay, I want to get into kind of more of a how-to for somebody. They can look at your story and like get inspired and see all the stuff you've done, and then kind of hear what goes into it and get a little bit like, okay, wow, seems like a lot. The numbers and the different strategies and turning rooms into 1 bedroom to 2 bedrooms. If you were to start over right now, like pick a random city, what would you do? Like, let's say you've done the research, you understand like the different terms and things like that, but how would you go get your first deal today starting over?
Well, the first step would be meeting with people who own the market. Again, I would do it the same way. Now I have my knowledge base. So whether I had my knowledge base or not, I would go meet with owners in that market and learn how they got to where they're at, because I know how to buy stuff in Grant County, Washington. I know how to do it. I haven't proven that it's possible anywhere. Well, there's like some markets, but I haven't proven it's possible in Arkansas. I know it is because there's people who own there, but I haven't proven it, so I don't have the knowledge base to do it there. I don't know what the problems are there. I don't know what the problems are in South Dakota. So the only way that I could really have confidence negotiating a deal or going into a deal is figuring out who owns all these properties that I want to buy or that I'd want to own. You figure out your property type. You may want to do single family. You may want storage. You may like apartments. I like apartments, but you don't have to. Figure out who owns the properties you want to buy after you've figured out your buy box, and then go buy them coffee. Go learn how they got to where they're at. That'd be the first step. And those discoveries that you make from those meetings, this is my experience, that's how I built my whole business. Because I would get their business model that they'd tell me, and some of the models were stupid. And not to say that they're stupid, but the way they built it was so wildly inefficient, but they still got to a place of massive wealth because of the amount of time they had invested and because they had a little bit of positive cash flow day one. And so I started seeing these common trends. There were some people that were super efficient, some people that were inefficient. The people who bought based on cash flow for the long term got wealthy regardless of how efficient or inefficient they were. So when you get your takeaways, you figure out what you like, what you don't like, what you can do, what you don't think you can do, and you try and replicate. And when you replicate it, what I would do is share if I won or lost. Based on that advice, I just let them know, hey, I tried this and it worked, or I tried this and it didn't work. Did I do something wrong? And I would keep that follow-up going.
And how are you reaching out to these people? I can't imagine you could just Google their phone number or something. Are you like skip tracing or
Just
whatever?
Google their phone number.
Yeah, you just type in their name, you find out who
Did
owns
you
it.
ever see the Dropping Bombs podcast with Brad Lee?
Yeah, I did.
That came from me Googling his phone number. I don't use paid programs. I Googled his phone number, reached out. He didn't pick up the phone. He cold called me back at the worst time. I was in Miami at a Cardone event, Grant Cardone, and
Yeah.
I was next to a drawbridge that was going off. So I had all this ringing in my ear. It was super loud. Boats were honking because sometimes they do the horn when they go under.
Yeah.
And he was my worst cold call I ever had. But I got his phone number online, and I still got on the podcast from that call.
No way. So you can just Google Bradley's phone number and get a hold of him?
That's how I got it. And I verified this. I just did a podcast when I was in Vegas. I was at the One Rental at a Time event. Have you seen Michael Zuber?
Yeah, he's got good stuff.
He's freaking awesome. But there was a guy there, Ryan Davila, and he's like, hey, you want to go do a podcast? And so he took me to his office. He does a lot of stuff with Pineda.
Yeah, I've been trying to get him on the podcast.
Yeah, and so he's like, you want to go do a podcast? And he started, in the beginning, grilling me on some stuff, which I love. Because it's like, I'll either know the answer or I won't. And he's like, can you still do that? Can you still find his number? And he's like, I want you to do it on my phone so that you don't have it saved. Like I would have that saved. So we found it and compared it with his actual phone number that I do have saved on my phone, and it's still there.
No kidding.
So we did that live on a podcast. I don't know when that drops, but you'll see it. I don't think we showed the number on the actual
He's going to change his phone
video,
number
which is the best, because then he'd change his number and wouldn't have it. But you get the idea. It's possible.
Dang. And then that interview was a pretty big interview. Did you get a lot of opportunity to come from that, just that conversation?
Yeah, I had opportunities that popped up, and more so than opportunities, it proved to me that these people are accessible. I sent a message. I found Jordan Belfort's phone number online, Wolf of Wall Street.
I need to do this to get these people on my podcast.
Yeah, and for him, I texted him because there's nothing I could say on the phone that would merit a meeting. And I don't want to, you don't call people unless you have a reason to talk.
Yeah.
But I wanted to see if it was really his number. So I spent maybe an hour trying to get my tonality perfect because, that's the guy.
Yeah.
And I sent it in a text, and that was all. And it showed that it was read, and then the president of his company called me the next day. It's like, hey, we got your video. What's up?
Whoa. Are you going to do something with Jordan or?
No. I don't have I don't have a program. I don't have anything like that. So there's nothing anymore that would ever make sense for me to talk to him. And he's out there living his best life.
Yeah. I guess kind of as we wrap it up here, what's one piece of advice you would give to someone that is starting out in real estate that I guess maybe you wish you would have known, or just one piece of advice knowing what you would know now?
It's possible. It's going to be harder than you think it is. It's also really worth doing. There's folks that are going to say you can't do that here, and that's just because they haven't figured out how to do that here. So I would find a way to use what you have to move yourself down the field, and whatever it may be, get little wins along the way, but don't take no for an answer, because there is a solution. I haven't found a problem today that there wasn't a solution.
Yeah. All right. There you have it. Thanks so much for coming on the show, man. I think I learned a lot. Everyone watching will probably get a ton of value. Where can people find you on Instagram, social media, that sort of thing?
I have a little YouTube channel, Cody Davis Business Adventures. I post a couple times a week on whatever's going on. So if I have a sewer break, I'll be there. whatever's going on. I just post 3 to 5 minute videos, typically no edits, and you can reach out there.
Get wealthy, everybody. Cody Davis.